Greetings, family. Today we'll continue with our series, which we've been looking at market sessions and the behaviors of market in each session. So we already covered. I won't repeat. If you are new to this channel, please you can check the first series. There is part 1, market behavior, and also part 2. So today we are doing part 3. So where I'm going to teach specifically on London session. London session. So London session. Okay. So now I was explaining something to say the markets, they behave differently. There are guys called the dealers. The dealers. These guys, they're the ones that decide the direction of the market. So there is a way they behave during their each sessions. So today we'll look at how these dealers behave during London session. And remember, you can't trade against these guys called the dealers, the big guys, the big boys. Others they call them the liquidity providers, others they call them the big guys, others they call them whichever name they call them. Yes, but personally I like calling them the dealers or liquidity providers. So this one, they give the direction of the market. And today I'm going to expose them, how they behave during the London session. Okay, so please pay attention. If you are new to this channel, make sure you watch the first session. The first session is named Market Behavior Part 1. There is also Part 2. So you make sure you follow for you to understand this strategy. This strategy is really been profitable, and I came to discover this strategy later, after I've lost quite a lot of money since my trading. Since my trading journey, I've lost quite a lot of money. Not until I came to discover this strategy called trading with the dealers. So you need to understand the market structure. And the market structure, each time their consistency structure, their consistency market behaviors, and these things the way the market has been behaving 2 years ago, a month ago, a week ago, a day ago, an hour ago, is just the same. It doesn't change, it's just the same. Therefore, if you capture this, I'm telling you, you'll be very, very profitable trader. Okay, so without wasting much time, let's get to these issues. So yesterday we ended on the Asian session, where I had drawn an Asian session, and this is the market. This is how the market behaved during the Asian session. But at some point it will go like that, but it will be still within the box. Okay, like that. Then I remember I mentioned something that here, this is the lower part of the Asian session, and this is the upper of the Asian session. So during this session, the market is doing the accumulation. It's in the accumulation phase. Why is it called the accumulation phase? I explained this, I think, in the first video. So now I mentioned something to say, when this session ends here, the next session that comes is the London session. Now The London session, these guys, the big guys, there is a way they push the market. Sometimes they push the market going down like that, then it will respect this lower of the Asian session, it will respect this part, then the market, it will spike going up like that. Then there are also times, okay, there are also times when the market comes there, it comes there, then it will push a little bit down like that. Then it will go up like that. Then there is also another part. The market will behave like that, it will behave like that. Then it won't touch either the top part of the Asian session or the lower part. It will be just within, maybe it will just reach somewhere here, then it will spike going down like that. So all these ones are differences how the market behave immediately the Asian session ends here. Remember, today we are talking about the London session. So now I want to show you something, how these market dealers manipulate the market in order for you and I to lose money. But I'll never lose money because I've understood these guys. Okay. So now, yesterday I was mentioning of timings. The Asian session ends at 80:30 somewhere there, 80:30. Then the London session, it opens at 9 hours. Get this right? It starts at 9 hours GMT. Now, today I'll show you, we'll look at one of the ways in which the market behave. Okay, so allow me to lab this. Allow me to lab this here. Okay, let me shift. So now I want you to pay attention. Okay, I want us to look at these things. This is A and this is B. Okay, so you can see this is W and this is M. Then this one C, V, VV. Then D, this, okay. So these things you are seeing here, please master them. This is the interesting part of this strategy. These things you see, if you check on your chart, you'll be able to see these things on your chart. WM, this one is inverted V, there's such a term, and this is VV. So now, when the Asian session ends, okay, here, it ends right there, then you'll see something like this. Which comes back to this one. So now, this is the market structure. You need to master this. Okay, now there is this time 9:45. This letter, it has two legs. There is a first leg and there is a second leg. Okay, each time, most of the time, this first leg, it will appear at 9:45. Okay, 9:45, this first leg will appear. Then how will you know that we are on the first leg? Most of the time you find these candles. I think we'll look at the types of candlesticks, but for now, please just master this. This is a pin bar. There is also this candle, which is an engulfing candle. Remember, it's called an engulfing candle because the previous candle has been swallowed by the next candle. Then there is this one, the pin bar. The pin bar, it gives us information to say there was a rejection. It has a long tail and a small top and a small body. Sometimes it doesn't even have a body. So this candle, it will show up at 9:45, just after the Asian session. Remember, this is GMT plus 2. This is the time zone. So you will see this one here. Immediately when you see this one, what you need to begin to look at is the second leg of this W. When the second leg appears, you begin to consider buy here. It's a signal for you to buy. I guess somebody is getting this one. When the second leg appears, by either seeing this candle here, like that, it's a confirmation for you that this is the second leg of this letter. You need to consider buy somewhere here. You buy, you place buy, and you'll be light in the profit. Don't worry, I will show you these things on the chart, on real life chart. For now, please just pay attention to this theory. We'll look for these things on the chart. Then coming back to this letter M, you'll see it here. And you'll see this candle. Sorry, my light is something else. You see this candle here. This is the first leg of M. Then the second leg, this one will appear again here. Then the market will begin to go down like that. And you enter your trade here, just after seeing this pin bar. Remember, trading time frame is 15 minutes. 15 minutes. Master this. Your time frame is supposed to be at 15 minutes. So you see this candle here, it's a confirmation that another leg. Now, get me right. this candle sometimes it won't be the exact M as you think. Okay? But these things, they are always there on the market. If you are not seeing it, you are not just paying attention. They are always there. It may not necessarily appear exactly like M like that. Sometimes it will appear like this, like that. It's still M. But you see a confirmation candle, which is a pin bar. And the first one is here, the second one is here. This is still M. And you consider place your buy here. Now, sorry. If your M is like this and the second leg appears somewhere on top, it means that the market will go down for a long time. I will still repeat. If the other M is far from the first leg, it's a confirmation for you that this market will do a very big reversal and it will come down like this, even by passing where it started from to go down. So this thing, they keep on appearing on the chart, but the problem is for you to know, to determine. That's where the challenge is. But once you capture this information, I promise you, you'll be very successful in your trading journey. You'll be very successful in your trading journey. Then sometimes this shape, it may not necessarily appear like this. Sometimes it can go down as far as somewhere here, then it will go up like that, but that one should be in between 10 and 12. It's very good time to place these trades of these M's between 10 and 12. A.m. GMT time zone. Okay, then starting from 14, actually starting from 13 to 15:30, start considering trading reversal. Why do I mean? If the market has been, it formed M like somewhere there, then it went up, it will go up, it will go up. Then somewhere between 13 and 15, begin to look for reversal. This market will definitely come down. How do you look for reversal? It will form another M like that. It will form another M. You enter a trade here, and it will come down, it will come down, it will come down, even by passing the Asian box. It will come down, it will come down, it will come down, then it will do another reversal like that. Then accumulation phase starts. Then second day. This is how the market behave. So this is where it started from. It will come down like this, it will go up like this, it will form another M, it will come down, then it will move a little bit up like that, then accumulation phase. So the reason why the market okay, Now, let me show you something. Now, it's like this. This is the agent box. Like that. Like that. My marker. Sorry, there's some water here. I'm using water to just clean my board. To another agent box here. Okay, this is the agent box. This is New York. It's form M like that. This is the agent box. Okay, so this is how the market moves. This is what we call market structure. Okay, so the market to move like that, then here, remember, sometimes it will move even continuous 3 candles like that, big spikes just after the Asian session. And a lot of people, they will place buy after they see these big green candles. They will place buy here. So get this slide. Each time when you see spikes just after the Asian session, big spikes, whether is they are bearish or they are bullish, you see those spikes, what comes in people's mind is, no, the market is going in that direction. Then you enter your buy. If there are spikes, if there were green spikes or bullish, you enter buy. For which this mistake a lot of traders have been making. Why? Because the market dealers, they know that psychologically when a human being sees big spikes in that direction, they will think there is a strong pull of the market in that direction. Meanwhile, they are just tricking you. And guess what? Just after these big spikes, then the market move going down and even eat your stop loss somewhere there. Because definitely for you to place your buy here, maybe you had placed your stop loss somewhere here or somewhere here. Then your take profit maybe somewhere here. But it won't even hit your take profit. It will push the market down. Then immediately when it will push the market rapid, then what comes in your mind? No, there's a direction of the market is changing now, the direction. You cross this trade, the buy here, you place here another buy, and the market to still going down, it will still going down. Then you are now convinced it will move. Sometimes this is the first move, second move, then third move, 3 moves. Then in the psychological, human beings say something to do with C3. So when they see these continuous spikes, what will come in their mind to say, no, this market, I think it will continue going down because there is a strong market trend here. Then you place your sell. Then after you place your sell, remember, the other traders who've been trapped here. The other traders who've been trapped here, they placed it. They placed buys here. And they are trapped. So what will happen, it will be just there. Then there are others who've been trapped here who placed sell. Maybe their take profit is somewhere here. So it won't even hit their take profit. The market will change the direction. Then when it changes the direction, it will make sure that it doesn't hit these guys here who placed trades. Then it will go and enter in the accumulation phase. So both traders have been trapped, this and this. And that is how people have been losing money just like that. So you need to understand these behaviors in order for you to make it in this business. You need to understand these guys, big guys, or dealers, or liquid providers. This is how they move the market. You will see this even when you check on your chart. You see these moves. You can confirm with me, check on your chart, but don't worry. If you are not seeing them, I'll help you to see them probably in the next video. The next video, I'll be explaining also some few things. Please tune to the channel. I'll be posting interesting information. If you are new to this channel, please just subscribe so that you'll be able to get update whenever I come up with a video. So tomorrow we'll be looking at another interesting thing. Remember, it's a series, so we'll continue posting on this channel. Thank you so much. See you to the next video.